Something big just went under the radar, but don't worry, we still have time to grab it. This will be the last one. However, this could pose a massive risk worth millions of dollars for many holders. So let's find out what I mean. Yesterday was an incredible roller coaster ride in the cryptocurrency world. A startling discovery sent panic through the market, and nearly $300 million in leveraged positions were liquidated in a single morning. That sums up how volatile this space can be, and the recent Bitcoin event has only served to fuel the flames. It is essential that everyone exercise caution in the near future. It's almost a given that market changes will occur, but it wasn't the only thing that happened yesterday. In fact, something much more important happened. Something happened in the Shiba Inu ecosystem yesterday that, at first glance, didn't seem like a big deal. Surprisingly, Shiba Inu influencers didn't even cover it. Good news doesn't often go unnoticed, but this news is far more significant than anyone initially realized because of one important detail that nobody noticed. What's up? Well, SBC Trade, the cryptocurrency division of SBI Japan, has opened up a new opportunity that might seem boring at first glance but is actually pretty exciting. They've launched a new service that lets you earn passive income with Shiba Inu and a few other cryptocurrencies. It's like when you ignore a tiny scratch on your car only to realize later that it's a sign of a much larger problem underneath. The news was released directly from the source by SBI, who detailed it on their blog and announced it on their official X account. The service is called Rentcoin Lending Service, and it is available to owners of Shiba Inu Bitcoin and Bitcoin Cash. The arrangement is that you can lend out your cryptocurrency assets that you don't intend to sell anytime soon in exchange for rental fees during the lending period. SBI clarified that this is only for people who wish to get some additional money without having to sell their Bitcoin. This is similar to lending your beloved books to someone else who wants to read them and earn some money while keeping your collection safe at home. In fact, this is essentially how the library business got its start, and to top it off, more than 75% of Shiba Inu holders don't intend to sell their tokens anytime soon, so there's a sizable population that might be interested in this opportunity. When you consider it, the discovery is actually pretty interesting, but what's more intriguing is that a bank is providing this chance. Indeed, you have heard that. You may be thinking, wait, don't banks usually hate crypto? And you would be correct. In fact, a lot of banks aren't exactly lovers of cryptocurrencies, and we're not just talking about small banks here. Some large ones aren't too keen on it either. For those of you who still don't understand what I mean, here's a quick eye-opener from a Twitter user that clarifies the main problem with banks in plain English. They shared a story about how even banks that are supposed to be crypto-friendly can freeze accounts over cryptocurrency transactions. For example, in the UK, there has been an increase in frozen or restricted accounts belonging to crypto professionals. Remarkably, this includes banks like Revolut, which is known for providing services that are crypto-friendly. The user describes how using the Revolut software to move Ethereum to their own wallet resulted in fees and account freezes. This event highlights issues with users' authority over their personal money and highlights the thin line in the US. Traditional banks are also canceling the accounts of long-term clients who employ digital assets, forcing them to choose between regulatory compliance and exceptional customer service. Raising concerns about motives and openness. Positive friction regulations in the UK are intended to improve consumer protection, but they may potentially cause cryptocurrency investment procedures to lag. This story highlights the conflict between established banking institutions and the expanding cryptocurrency market. One user aptly expressed dissatisfaction with banks suspending cryptocurrency accounts and demanded greater transparency and user control over monies. Many people in the cryptocurrency community agree with this statement, which is unquestionably beneficial and consistent with financial independence and empowerment of the customer, encouraging justice and accountability in banking practices. On the downside, however, banks' repeated freezing of cryptocurrency accounts raises ethical questions about the fairness and trustworthiness of financial institutions. It also draws attention to issues of discrimination against people who are involved in legal and legitimate activities within the cryptocurrency space. such actions can undermine consumer confidence in traditional banking systems and prolong feelings of injustice or exclusion among cryptocurrency enthusiasts. Here's where it gets even more interesting: major banks like J.P. Morgan, run by CEO Jamie Dimon, who was infamously anti-crypto and even called for its outlawing. However, as you may have guessed, it was just revealed that Dimon is an approved participant in the Bitcoin spot ETF. This revelation caused quite a stir in the cryptocurrency community, and when it initially surfaced, it prompted some serious discussions. It's a bit of a puzzle, isn't it? Banks seem to dislike cryptocurrency because it gives people too much freedom, but they're perfectly fine making money off of it themselves. This doesn't sit right. Banks should be consistent in their stance and treat all customers fairly regardless of their personal interests or investments. This kind of double standard erodes confidence in the financial system, which ultimately hurts consumers and the larger crypto community. As SBI Bank continues to roll out new cryptocurrency services like this one with Shiba Inu and lending, something interesting happens even though they didn't speak negatively about cryptocurrency in public. People are beginning to divide into two camps: those who think that all banks will eventually fully embrace cryptocurrency, and those who think that cryptocurrency is a Trojan horse, a hidden danger, or a threat that is disguised. It's unclear how long banks will continue to add new cryptocurrency services before possibly withdrawing, but as long as they do, prices and adoption of cryptocurrency will probably continue to rise. Let's circle back to the earlier discussion, where over $300 million has been. This week, the price of Shiba Inu has notably held steady above the 42 mark despite the broader crypto market experiencing a significant downturn. This decline, totaling over $50 billion, has been attributed to escalating news in the Middle East sparking fears and uncertainty among investors. However, amidst this turmoil, Shiba Inu has demonstrated resilience, managing to avoid a major reversal. Liquidated in just hours. Analysts are warning that Shiba Inu traders could face losses of up to $1 million if something goes down. The conduct of Shiba Inu's investors can be linked to the company's resilience. On-chain data indicates that investors have chosen to hang on to their Shiba Inu tokens rather than giving into the tumultuous market conditions. They are setting themselves for possible future rewards by selling into market panic, uncertainty, and doubt. Over the past 7 days, around $9 million worth of Shiba Inu tokens have been removed from exchange-hosted wallets and transferred to cold storage. Analyzing the movement of Shiba Inu tokens across exchanges offers additional insights about investor sentiment. Shiba Inu has been able to sustain its price level because of the removal of tokens from easily traded marketplaces, which has lessened general selling pressure on exchanges. Additionally, examining liquidation maps provides insight into the state of the market. Data shows a noticeable move in favor of optimistic sentiment among leveraged traders, with long holdings outnumbering short ones. In concrete terms, this means that most derivative with these factors taken into account, traders are placing bets on the Shiba Inu price rising in the near future. The outlook for Shiba Inu looks positive, and as the illustration above shows, Shiba Inu short traders run the risk of losing over $1 million in potential liquidations if prices rise another 10%. Given the sizable stake that the bulls have in the market, it now appears more likely that the Shiba Inu price will advance towards 10% gains, so people should exercise extreme caution as they could lose more than $1 million in liquidations. That remarks below this brings this film to a conclusion. If you would like to view more, please click on one of the videos you see on the screen. I would be happy to hear your thoughts. In order to help me with the YouTube algorithm, if you liked the video, please like it and don't forget to leave a comment. You can also help spread the word about this story by sharing it with as many people as you can.